Even though NACA doesn't require funds for a down payment and the majority of your closing costs, there are still out-of-pocket costs that you will incur using the NACA mortgage program when purchasing your very first or next property. The minimum required funds are funds that you must have available to pay these costs, including prepaid expenses at closing and a reserve for 1 to 6 months of mortgage payments depending on the type of property. Now, the minimum required funds for a NACA mortgage is still much lower than any other mortgage, and towards the end of this video, we'll go over a breakdown of the minimum required funds in comparison to a traditional mortgage. What's going on YouTube? My name is Art Smith, MLS number 2013410, and on this channel, we talk about personal and real estate finance data points in order to help you build wealth and increase your overall net worth. So if you haven't done so already, subscribe to the channel, like the video, and share your thoughts and comments and questions in the comment section below of this video. Now, some of the out-of-pocket costs that you will see on your closing disclosure while using the NACA housing program are going to be your EMD, also known as earnest money deposit, inspection fees, prepaid property taxes, prepaid homeowners insurance, prepaid mortgage interest, any HOA fees if applicable, and any reserve requirements from you while using the NACA mortgage program. Now, when submitting offers on a home for sale, if your offer is accepted, you are going to be required to put down a deposit, also known as an earnest money deposit, and pay for an inspection fee upfront. Earnest money is often required by the seller as a deposit to hold the property until inspections are completed and the loan application is approved. Your deposit is applied towards prepaid expenses, any NACA buy down or principal reduction, or otherwise returned to you upon closing. Inspection fees such as a termite inspection, electrical, plumbing, or structural system assessments are paid up front so the overall property condition can be evaluated. These fees are non-refundable even if you choose not to purchase or cannot close on the property. Prepaid property taxes, homeowners insurance, and interest are required on all home purchases and can add up quickly depending on which month that you close within the year. So please plan accordingly because these funds will be required by your lender at closing and be held in an escrow account and then be later applied and paid for you on your behalf towards your property taxes and homeowners insurance when they come due. And your future mortgage payments will include portions of your property taxes and homeowners insurance, which will be collected every single month and then again be applied towards the payment that's due every biannual or annual when it comes to your property taxes and homeowners insurance. Now, any overpayments will be addressed at the end of the escrow period or the escrow analysis, and the lender will either cut a check to you for overpayments, or if there are insufficient funds, then any additional funds will be required from you at that time. Now let's talk about the NACA reserve requirements. NACA requires reserves based on the following. If your payment shock is less than $300 per month, then only 1 month of mortgage payment is required from you at reserves. If your payment shock is greater than $300, then 2 months of mortgage payment is going to be required from you as a reserve. And if you are self-employed, then 3 months of mortgage payment is going to be required from you as a reserve. Now, really quick, what is payment shock? The shock experience when your payment is suddenly more than what you are accustomed to paying for in rent is called or classified as quote unquote the payment shock. A mortgage payment greater than your rent requires you to demonstrate your ability to save the amount equal to the difference between your current affordable rent and your desired affordable monthly mortgage payment. Now let's go over some of the minimum required funds for the purchase of a multifamily property. The minimum required funds for a multifamily property purchase is as follows: 4 months of mortgage payments on a duplex, 5 months of mortgage payments on a triplex, and 6 months of mortgage payments on a 4-unit property. Now these next few facts or data points are going to be very important, so make sure that you pay attention to this portion of this video. All mortgage reserves must be documented in your bank account prior to closing, and these funds cannot be used towards a principal pay down or a rate buy down as well. And just to be safe, make sure that your reserve funds are going to be seasoned in a bank account for at least 2 full bank statements with no large deposits going in and no large withdrawals coming out of that bank statement, again for 2 full months. Funds for your reserves can be in any of the type of following accounts: checking or savings accounts, money market accounts, and CD accounts. These funds must be liquid and readily available at the time of NACA qualification. You must source any non-payroll deposits or any large deposits going into your bank account, and the minimum reserve funds can include gift funds or any other large deposits that are not from a loan or to be part of the purchase transaction. And if you are one to keep cash on the sidelines, it is recommended that you deposit your cash into a bank account as early in the process as possible. Now here is an example and breakdown of the minimum required funds in comparison to a traditional mortgage and the NACA mortgage on a $200,000 purchase. Now, as you can see right here on the left-hand side, this is going to be a traditional mortgage, like a conventional loan, assuming that you are going to be putting 5% down. And on the right-hand side, you're going to see the NACA mortgage with no down payment required. Now, again, every single offer is going to require you to put down a deposit, also known as your earnest money deposit. And this could be anywhere from 1% all the way up to 3%. Now, there is no set rules as far as what the minimum amount is for a deposit, but 1% to 3% is going to be traditional. So that's what you'll find here on this table. $2,000 is going to be 1% of the overall purchase price of $200,000. So you are going to be required to put a deposit for a traditional mortgage as well as the NACA mortgage. Home inspection is going to come in around $600. It can be more expensive, especially if you're purchasing a multi-unit property with a large footprint as far as square footage, and if the other units are going to be tenant occupied. So if you are going to be purchasing 2, 3, or 4 units, expect the home inspection fee to be greater than $600. Your attorney fees on both sides are going to be $0 according to this breakdown, and your credit report fee on a traditional mortgage is going to be $45 in comparison to the NACA mortgage is going to be $0. Now, there are going to be application fees and appraisal fees on a traditional mortgage, however, not on a NACA mortgage. And this is going to be a huge savings for you if you use the NACA mortgage, because appraisal fees on multi-unit properties could range anywhere from $1,000 to $2,000. Now, costs at closing are going to be the following, which is going to be down payment, origination fees, doc prep fees, lender title insurance, mortgage insurance for the first year, lender attorney fees. All of those fees are going to be zeroed out on the NACA mortgage side. However, on a traditional mortgage side, you are going to have to incur expensive fees that pertain to down payment, factoring in 5% down, origination fee, which is coming in at $2,000, doc prep fee, which is coming in at $200, $225 for lender title insurance, mortgage insurance for the first year is going to be $1,500 on a traditional mortgage, and again, $0 for the NACA mortgage, as well as lender attorney fees at $600 for a traditional mortgage, and again, $0 for a NACA mortgage. Now, you are going to have to pay your own homeowner's insurance, given that you are going to be responsible for this fee as a homeowner. So the estimate for this breakdown is going to be $1,200, and again, that's going to be on both sides of the table. Other lender fees, $350 for a traditional mortgage and $0 for a NACA mortgage. Now, prepaid and escrow fees, mortgage insurance, 2 months, which is going to equate to $300 for a traditional mortgage, but $0 for your NACA mortgage. Homeowners insurance, you are going to have to pay that on both sides. Real estate property taxes, you are going to have to pay that on both sides, as well as prepaid mortgage interest, you will have to pay that on both sides. Now, 1 month's worth of reserve, also known as your principal, interest, taxes, and insurance, is going to be zeroed out for traditional mortgages. However, this is not going to be a fee that you are going to be giving to the lender. This is going to be a requirement on the NACA mortgage side, depending on how many units that you purchase, depending on your payment shock, as well as depending on if you are self-employed or not. And again, this is not going to be required for you to give to the lender at closing. This is just going to be required to show proof to the lender in the form of a bank statement so that you can close on this property. Again, not to be included in the closing costs. You are just going to need to show proof of those funds in a bank statement. So as you can see at the very bottom of this example and breakdown, for a traditional mortgage, you're looking at $20,000 that's going to go towards closing, or that's going to be required from you at closing, which is only going to require $5,000, again, minus your reserves, because that's not going to be what's required from you at closing when it comes to closing on a house. I will link this breakdown and this example in the description box below for your reference, and you could study this as well too, just in case if you're looking to jump into homeownership using the NACA mortgage. All right, guys, that's going to conclude this video. Hopefully this information was valuable to you. Definitely reference that document in the description box below for the full breakdown of the closing costs for your reference, and you can study this on your own time so that you could understand what is going to be required from you at closing. If you have any questions that pertain to this video, definitely drop your questions or remarks in the comment section below. I will list my email in the description box below as well too, just in case if you want to reach out to me privately. My name is Art Smith, MLS number 2013410. If you haven't done so already, subscribe to the channel, like the video, and do me a favor and share this with a friend or family member who is looking to take advantage of the NACA mortgage program. Thank you so much for watching this video, and I'll catch you on the next one. Goodbye for now.